Here are the 7 fundamentals of building wealth. First one, markets work. Don't try to find mispriced securities. Everything's priced into the market. So if it's public information, it's already reflected in the price. Risk and return are related, so you get rewarded for taking high risk. So the higher the risk, the higher the reward. Simple as that. Portfolio structure is important, that your asset allocation actually explains the returns you're going to get. So whether you have your assets in defensive investments such as cash and fixed interest, or your growth investments, Australian shares, international shares or property, will determine what your return is. Cost and taxes matter. So the net performance you take home is after the costs you pay and the taxes you incur. So by having a strategy where you're not trading on a regular basis, you reduce your costs and also your taxes. Discipline is paramount. What we mean by this is making sure you're in charge of your emotions and you're not buying and selling, because that doesn't add value. So you get rewarded for being in the market, and it's important that you stay the course. Time is your greatest asset. Investing early sets you up for long-term success. So for young people, it's really important that they start early, because the growth just compounds, and before you know it, we're talking about a large amount. Those people are in a better position over the longer term because the money's working for them longer. Investing isn't speculating. It's not about picking winners and trying to outguess the market. You want to make sure that you've got a disciplined investment strategy and not trying to pick winners.